Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar, a second consecutive bullish closing white Mariboso and second bullish white soldier on Friday, creating a weekly key reversal up in the euro, one of many weekly currency moves against the dollar. It was the highest high and high close since September last year. The move up was capped by four distinct resistances. The June 2025 high at 118.29, the dark blue July 2008 to date downtrend, currently 118.33, the bright green May 2011 to date downtrend, currently 118.43, and the June 2018 high at 118.51. Further above, we have the 2025 high at 119.17, then the 2018 to date downtrend, currently at 119.85, and the neckline extension to the April to May 2020 reverse head and shoulder pattern, which is currently 119.94. These last two really stopped the market's rise in September last year, so I think they may be better resistances. Overall, despite the strong move higher, the market remains within the mid-2025 to date based bright red shallow bull channel. It's currently 115.81 to 120.59. However, we could have a late November 2025 to date lopsided bullish halfway hesitation. It's not a very clear pattern, but it does seem to fit the action, especially given some of the action in other markets. Finally, we are set up to achieve, with just this week to go, a monthly key reversal for January. Thus, if we close this Friday night either over 117.45 or under 115.95, then we're beyond. Anything in between will have a lesser outside month. Right now we are looking at a monthly key reversal up. Now so far today, a sharp spike higher through the four overhead resistances, but halting and turning lower ahead of the high at 119.17. It's looking like a possible bearish shooting star pattern right now. Cable, aka sterling against the US dollar. A significant bullish closing long white Mariboso on Friday, and second bullish white soldier, with the highest high and high close since very early July last year. The market punched up through congestion between 135.16 to 135.59, as well as 135.81, but finally got lodged in the next resistance band beyond, between 136.21 to 136.43. Within that overhead congestion band lies the dark blue upper bear channel line, currently at 136.28, part of a very shallow dark blue bear channel dating between early July to early August last year to date, and that's currently at 130.01 to 136.28. The market made a significant close over this dark blue upper bear channel line. We'll now see if prices can exploit this seeming significant move higher. Overhead, apart from the September 2025 high at 137.26 and the earlier July high last year at 137.88, we have the bright green 2021 to date downtrend, currently at 137.21. Now, this action since the double bottom seen in November last year is looking increasingly like a possible bullish halfway hesitation. If that is to be the case, then there is opportunity for a move up to the 138.50 area overhead. More on this as it develops. Now, so far today, a fresh attempt higher into a fairly free area overhead, but not willing just yet to test up to the bright green downtrend. US dollar against the Japanese yen. A huge combined key reversal down and bearish closing long black Mariboso on Friday, punching back down through the bright red broken upper bull channel line of the April to November 2025 broken but seemingly still valid bull channel. Prices dropped down below the green short medium moving average, currently at 156.42, and closed just below the June 1990 high at 155.78, and within the late 2025 congestion based around this 155.78 level. This now sets aside the secondary target X2 at 159.65 of the October to mid-November 2025 bright red ascending wedge pattern. The primary target at 157.90 was reached 3 weeks ago. As a consequence of this move down, we have a target X3 below in the 155.35 zone from the mid-January horn top. Now, so far today, a significant gapping move lower through target X3 below and down to the lesser Fibonacci line at 153.40 before pulling back up to around the pierced mauve medium moving average, which is currently 153.79. With this move lower, we are set up now with just a week to go for a monthly key reversal here for January. If we close either over 156.65 or under 156.15, we will be on. And that's on Friday, this coming Friday. Anything in between that, we'll have a lesser outside month. Right now, we're looking at a monthly key reversal down. US dollar against the CNH, the offshore Chinese yuan. A combined bearish closing black Mariposa and bearish engulfing pattern on Friday, if only just on the latter. It was another new low and low close, one not seen since May 2023. It was also a pullback within the small breached bright green bear channel, which currently is 690.69 to 695.26, formed since mid-December last year. Overhead, we have the September 2024 low at 690.690, whilst below, we still have the bright red extension to the upper trend line, currently at 693.02, of the May to August 2022 ascending triangle, before we reach the May 2023 low at 689.53. I think it may be time now to start talking about the 50% Fibonacci line below, and that's of the February 22 to April 25 move at 686.60. Now, so far today, a further decline, making a new low, but not an aggressive move, and we are indeed testing the overhead bright green upper bear channel line again. US dollar against the Brazilian real. An indecisive spinning top on Friday, verging on a possible indecisive doji cross after the previous session's second bearish black crow. Prices did dip lower, ever so slightly, and rested on the interesting 38.2% Fibonacci line of the October 2018 to December 24 move at 527 even, part of a small but significant congestion band between 526.20 to 527 even. This band is coincident right now with the important declining dark blue middle time, currently 527.11, of the mid-December 24 to mid-April 25 bearish shift pitchfork. This pattern continues to be the showrunner for this market. Meanwhile, overhead, well, we still have the combination of the mauve medium moving average at 538.34 and the flatlining green short medium moving average, currently 540.11. You could argue that the action since late December might be a form of bearish halfway hesitation, but I find that a rarefied argument despite it appearing to be possibly true, in which case you might look to the 522 zone below as a likely outcome. US dollar against the Mexican peso. A bearish closing black Mariposa on Friday and the lowest low and low close since June 2024. It was also a first close below the small, dark blue, November 2025 to date based bear channel, and that's currently at 1742.53 to 1787.61. This is not too well defined as a bear channel, but it's still there. We're actually in a fairly dead zone at the moment, dead area I should say at the moment, but not much support, with not much support until the congestion between 1703.89 to 1709.23, and that's made up from the April and March 2016 lows respectively. Below this is further congestion at 1688.97, and then there's a neckline extension to the January to May 2021 head and shoulders top, currently at 1685.55. So far today, a small dip lower, but then a pull back up, and looking potentially possibly like an indecisive spinning top doji cross right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.